I would disagree with you on one thing, that we're not facing inflation. Our inflation rate here is actually higher than that in Europe, probably by, I don't know, 200 basis points. I would say and I'm not talking about, people that argue our inflation is 25%. I'm arguing about what the CPI is telling us.
Stephen, you've just, again, it resonates so much. I mean, joined us on one of these episodes was Daniela Martino Booth's ex-Fed insider, very, very respectable. And we kind of raised the subject of the US and kind of splitting ways, going on a divergent path to Europe. So if we just look at the gold part of that, I mean, first of all, from the respect of the fact that we are in Europe on a landmass that has Russia and China on it. And obviously anything in the past, if we look at a bit of history here, is every single time there's been anything that geopolitical upset, primarily instigated by the US, what's happened is the migrant crisis hits Europe. Now we're talking about energy prices going through the roof. None of this affects the US directly. Indirectly, yes, but directly not. And so, so you've got one side of things where, I obviously got a lot of clients, some of these billionaires, and they're literally saying, look, we're very angry. We're very angry with the way this is going now. But the key thing is the gold side of this. Now, we tracked what's going on with the Bank of International Settlements. And clearly, when you look at the Fed, and as Daniela said, look, the Fed has never once discussed gold. They have no interest in gold. It is not even a part of their vocabulary. And yet, on the other side of things, Europe has gold, discusses gold, talks about backing currency with gold. The Bank of International Settlements has brought in Basel III, which has created NSFR standards for gold, i.e. getting rid of the paper element of gold. Why are they doing this? Because they know gold has to be revalued. And they know essentially what's happened is this gold window you talked about in 1971 when Nixon withdrew that window. All of a sudden, because they've suppressed the price of gold through the futures markets ever since then, in fact, the futures market was started basically 2 years after 1971 for the sole purpose of creating paper dilution. And what's happened is suddenly Russia, China, and smart people, including Europeans, are saying, I'll tell you what we'll do. Why don't we exchange our devaluing dollars? And there is a gold window. Guess what? It's so undervalued, and silver too, it's so undervalued that what we'll do is we'll exchange our depreciating dollars quickly for anything, land, forests, gold, silver, anything we can buy. And so now we've got a divergence where we think that Europe and the US are at a very divergent path, and it probably doesn't bode well ultimately for the US.
No, it doesn't at all. And the only thing that I would disagree with you, I mean, I agree with you on everything you said, absolutely. But what I would disagree with you on one thing, that we're not facing inflation. Our inflation rate here is actually higher than that in Europe, probably by, I don't know, 200 basis points. I would say and I'm not talking about, people that argue our inflation is 25%. I'm arguing about what the CPI is telling us. CPI is telling us our inflation is at 7% and rising, 7.5% and rising. And if you look at commodity prices, which are priced in US dollars, they are at all-time highs. And I'm not talking about oil. I'm talking about commodity prices, ex-oil, not even including oil, are at all-time highs. I'm talking about copper. I'm talking about not gold, but I'll mention gold in a minute. But it's across the board, our food prices, and the disparities in income in this country means that people are going to have trouble feeding themselves. I mean, last night I actually heard mentioned, ironically enough, by one of the news organizations that people are talking about the possibility of wage price controls. It's almost like we have come full circle. We left the gold standard that necessitated wage price controls. Now, after nearly half a century, but no, it is half a century, we're thinking of coming back to wage price controls. And this time, I'm hoping it will lead back to a gold standard, and gold will have to not just be revalued, but it'll have to be structured so that it can be revalued as we go along. And the reason commodities are in short supply, Andrew, I mean, I can't go into all the details here. I did in my book, but you know, one way that we use the dollar is to try and buy commodities, and that's scary. And one reason we have this oil crisis today is because of something called fracking. Now, fracking by itself, there was a business there, and it was a good business. But the idea was not to start a business in which oil was advancing, production was advancing by 2 million barrels a year. That was not sustainable. And you can look it up, but you know, my guess and other people's guess might not be exactly the same, but I would estimate we lost $2 trillion, about $500 billion in fracking because of how fast we geared it up. And the only reason is this kind of nearsightedness that we wanted to be independent in oil and in energy. And the only thing we succeeded in doing is wasting fantastic amounts, literally fantastic. It's not believable how much oil we wasted and how much cheap oil that we wasted. And now today, when we desperately need this stuff, we were asking Saudi Arabia to pump more oil for us because we also are constrained by this climate change, climate control, which I agree with. Yes, we've got to become green, but you cannot become green by banning fossil fuels. I mean, that's your major energy source. I mean, my goodness, before fossil fuels, there was coal. Well, coal is a fossil fuel, but before coal, there was wood. We're still using wood. In fact, wood is a more important energy supply to this world than is solar. Wood is much more important than solar right now as an energy source. And, you know, these energy sources are needed. They should not, they don't necessarily go away. And we have to, in order to have a 21st century, not just a 21st century for America and Europe, but a 21st century for the entire planet, we're going to have to get to be sustainable. And in order to get there, you're going to have to use all the fossil fuels you have. And there's plenty of evidence that we basically shut in. This book that was written by Stephen Kuhlman, he was head of the Jason Society for the society that advises presidents. This goes back to Sputnik, and what a difference between Sputnik and now. I don't want to get too distracted, but basically the Jasons are probably the most elite government advisory committee that there is, and it's apolitical. And he served Obama. That was his, and Obama was, if anyone was green, Obama was green. I mean, he basically was, you know, and he came out with a book and said, yeah, it's important to do this, but there's no evidence that if we don't complete it by the year 2100, that the world is suddenly going to go up in cinders. I mean, no one knows. It could be colder, it could be warmer. Likely it'll be warmer, but quoting the UN, the very body that won the Nobel Prize for doing the climate work, their estimate, the UN's estimate, is that by 2100 or so, if we did nothing, and the sort of middle case holds true, GDP growth will be on average for those, 80 years, maybe a tenth or so, or 2/10 or so less than it otherwise would have been. Climate change is not an existential threat right now. It could become one. But what is an existential threat, and I mean this really, is commodities. They're not, we don't have enough of any of them, including copper. Mm-hmm. And we're at tipping points in so many of these commodities. Copper, for example, grades are down to 1/2 I think, gram per ton. And if I get the measurements right, sometimes I get confused in units, but they're at this I do know, they're at the point where it's starting to take much more energy. You reach these kinds of points where you have a gradual uptrend, and then it's sort of like a very gradual uptrend, and then all of a sudden this kind of hockey stick that people talk about with climate change. Well, the real hockey stick is how much energy we need to get commodities, and copper at 1/2 gram per ton is there. The amount of oil we're going to need to suffice and produce the kind of copper we're going to need for electric cars, for power wires, for everything it's going to take to put solar and hydrogen and all these alternatives is just enormous. Copper has to become a scarce metal. The only thing that can save us is if we develop Africa. And we can't do this alone. I mean, even if we were what we once were in the 70s, we would need help in doing this. But in this position, China is doing all the things we should be doing, and we have to wake up to that. Maybe Europe can wake us up. I'm praying. I really am. I'm an American. I don't want to see this happen, but it's happening, and I have to. I mean, I just shake my head. I'm sort of lost for words, and I'm almost teary-eyed talking about this when I think about Bell Labs and inventing the transistor and the things that we have done in this country, from the internet to all the stuff that could have been used for such wonderful purposes. And I keep asking myself, if somehow we hadn't fought that war in Vietnam, and if somehow we had managed to stay on the gold standard, can you imagine the technologies the world would have today? We might not have any of these problems. They might not, they probably all would have been solved.
Stephen, you mentioned commodities, and I think, of course, thinking always about silver as well. I mean, all commodities are obviously undervalued at this point. Bear in mind that everything we've just discussed. I understand what you're saying, but silver. Let's talk about silver for a millisecond here. Not only is silver money, because it has been for thousands of years.
I think longer than gold, actually.
It's also a commodity. And it has to be the most undervalued commodity on the planet Earth.
It is certainly, Andrew, it is so undervalued that I've done work on silver, and I've done the calculations. And here I worked pretty hard. I spent, I don't know, a week or a week and a half going through it and trying to realize how much silver we would need to create the amount of photovoltaics that we're going to need. Right now, photovoltaics accounts for, I think, something like 1 or 2% of energy. It doesn't even account for a meaningful part of electricity. Once, electricity becomes more widespread, we are so short of silver just as an industrial commodity. It's unbelievable, and it's not surprising. Look at the qualities that silver has. I'm just repeating what I think people that know the metal. I mean, it's the best conductor. It's a much better conductor than copper. It's not just electrical conductor, but also thermal conductor. Now, you don't have to be a whiz-bang chemist to realize if you're the best conductor of both energy and heat, there's going to be a lot of demand for you for this as a metal, and there is. And wherever we can, we try and thrift silver. That was the word I was looking for before. We try and reduce the amount that we need, but up to a point. Once you get to that point, you can't reduce it anymore. And once you get to that point and then try and scale up what you need, you're praying for a technological miracle. I mean, I have written in my publication seriously about the possibility of having to go to the moon to mine helium-3. I mean, because we're just not going to have enough silver. We're not going to have enough of these very basic commodities. But if you tell me silver is the most undervalued commodity, and actually in a world that's growing, I mean, the problem with silver, if we're not growing, it can, really punish you pretty quickly. Gold will not punish you to the extent silver will. But if you're growing, and if you're on your way to achieving those goals, silver, three-figure silver. I don't want to sound like some sort of moonshot guy, but it's cheap. It's cheap at three figures. It would be today at three figures. I mean, but again, I think it's suppressed. I mean, it's dramatically suppressed. Maybe as much or more than
Even 80
gold.
to 1. I mean, Stephen, this week we approached, or last week, we approached 80 to 1. I mean, it's been at 100 to 1. 80 ounces of silver to buy 1 ounce of gold. And then you suddenly think, okay, you mentioned a three-figure number. Well, of course, it isn't a conspiracy. It isn't crazy to think about these numbers. It's just that because there's so much paper silver, because there's been so much paper gold, then obviously we sort of almost psyoped into believing, oh, the $25 or $24, oh, that must be the price of silver. No, it's not the price of silver. The real price of silver has not yet been discovered, and the real price of gold has not
No.
yet been discovered. And yeah,
You're absolutely right. I mean, if you had to, if you have to bet, and I obviously want to bet that we're going to succeed. Somehow we're going to figure out a way of humanity becoming sustainable. And if that's the case, I almost feel like, incidentally, I mean, I'm sort of giving away, not in a Judeo-Christian sense, but we're being tested. Somehow humanity is being tested. And if we pass this test and manage to not necessarily agree with one another on everything, I mean, when I think about the agreement and the hatred of China, etc., and the hatred of this country, that country, and whatever, I think of a country like Albania. Albania is half Christian, roughly half Christian, half Muslim, and it doesn't matter. I mean, if you're a mother of a Muslim child or a Christian child, you want your child to marry another Albanian. I mean, sovereignty is important, but some of the other things, not so important. They really are. We can live with people that share much different beliefs than we do, and we're not. I mean, it's our immigration has made us great, and thank goodness for our immigration. Virtually every major important technology company, I'm not talking about Facebook, but I am talking about Microsoft, I am talking about AMD, Advanced Micro Devices, I'm talking about NVIDIA, I'm talking about any number of major technology companies, I'm talking about our best cybersecurity companies. They're run by individuals from the East. This is amazing. Microsoft was a nowhere company for about, 10 years until 2010, or, after the bubble. And then all of a sudden, somebody from India took over. Now they're, I think, the most valuable company in the world. The one exception is Apple. Yes, they are run by an American. I have to say that. But Microsoft and NVIDIA, I mean, the chairmans of NVIDIA and NVIDIA and AMD are uncle and niece. One's the uncle and the niece of the other. They're both from Taiwan. I mean, it's amazing it's amazing, but it's also incredibly sad, as I was mentioning before. Gordon Moore, he was the founder of Intel. He worked directly for Shockley, or his partner worked directly for Shockley, the inventor of the transistor. Where did this stuff go? And I'm sorry to carry on, but I just have to mention one thing about gold and silver. If you ask 100 economists, or 100, let me put it this way, 100 money managers, like the head of BlackRock even, I mean, these people that manage trillions of dollars, etc. What was the best performing asset in the first generation of the 21st century? What was the best performing asset? What would you say? Well, I'll give you a hint. It wasn't any industrial commodity. It was not an industrial commodity. It was gold. Gold outperformed the S&P 500 with dividends included. And also, Andrew, to your point, despite all the volatility and the downward pressure that we saw on economies and, a couple of cases, the beginning of the century, we had a big bear market, and in the middle of the century, where, commodities went down and silver went way down. Silver outperformed the S&P 500, dividends included. Copper outperformed the S&P 500, dividends included. And even iron ore outperformed the S&P 500, dividends included. Now, I will challenge you. I will bet you, an ounce of gold. I'm not going to bet you paper money, but I'll bet you an ounce of gold that you cannot find any money manager in this country who will recommend any commodity in their portfolio, in a person's portfolio. It's still 60-40, 60% stocks, 40% bonds, and no gold, even though it outperformed. I mean, talk about, I picked the best financial asset, S&P 500. If you're talking about cash or you're talking about bonds, I mean, the difference between gold and financial assets is just enormous. And this next 20 years, I fear what you're seeing right now is the 1970s, except on steroids, because the 1970s was basically a political issue where the Saudis basically boycotted oil. They wouldn't ship us any oil. That was a political problem. We don't have a political problem today. We have a fundamental economic scarcity problem, some of which is our own doing, as fracking illustrates. But this is not a problem we're going to get over very quickly without seeing commodity prices really, really skyrocket.